At PayU, we've decided to go on a journey to redefine the fintech space. This is why we're traveling around the world, crossing borders to meet experts, leaders, and innovators. People who we admire, people who are writing our alphabet. And by that, I mean the Fintech Alphabet.
Hello, hi everyone. So this is a new episode of Fintech Alphabet. Today we have two great people really with us, two really great investors, and more than just investors, just two great individuals. Really good, to spend time with them. So we have Ganesh from Quona Capital, and Stefan from SpeedInvest. So the first thing is, I just wanted to have a quick, intro of each one of you.
Yeah, I think, so just to introduce myself, I'm Ganesh Rangaswamy, one of the founding partners at Quona Capital. Quona is an exclusively fintech-focused emerging markets fund, and we specifically specialize in what we call inclusive fintech. How I got here is actually by wanting to sort of be an investor of entrepreneurs, because as an entrepreneur, I probably got turned down by I'd say 4 to 5 dozen investors. I think I lost count, and this was 15 years ago. Before we had a couple of more well-known value funds that invested in our company, which went on to become the largest hotel consolidator in India and Southeast Asia. It was called Travel Guru, and we sold it to Travelocity. But that experience was golden because there's significant gap between the way investors and entrepreneurs look at the world, or at least there was. Back in those days. Also, it's not easy to empathize with entrepreneurs if you have not walked the shoes. So there's a significant gap in the market, and frankly, I became an investor to say to see how one is I saw an opportunity, and two was to say how do we bridge that gap. And Quona has been as entrepreneurial for us, are actually more challenging, frankly, than starting a company, because as I tell folks often, when I was running a company, I knew exactly what we are building. But frankly, when you're building a venture firm, it's a lot tougher challenge to convince LPs sitting across the table that we'll find great entrepreneurs, trust me, and give me the capital. They're like, really? Why can't I find great entrepreneurs? So we realized, it was sort of foolish to start a fund assuming I'll have an easier life than an entrepreneur's life. I realize that it's much tougher because you're selling something that's a lot more amorphous.
Stefan, some similarities maybe with your story, right? You had a long and successful corporate career, right, before becoming an investor yourself.
Being an entrepreneur in the first wave, 2000, 2001 in the US, where I was not the founder, but I was an early joiner in an account aggregation play that went totally wrong. So, I mean, I experienced, all the things that, all the mistakes you can do. I was already scratching my head at the time because I was making more money at that startup than I did in management consulting. Obviously, fixed salary. Obviously, that was wrong. So, but, I guess I was very fascinated by this short experience. And so I think for the remainder of the 2000s, I was really looking to get back into tech entrepreneurship. And the way I got back was through venture rather than starting my own business. There's this incredible complementarity between these, younger, hungry guys that want to tear down the walls and change the world for the better. And, old guys like myself, whose role was to make sure these guys don't go straight into a wall. And just to, 2 sentences on SpeedInvest. So we're an early stage fund. We've raised a bit more than 400 million over the years. We don't do only fintech. It's about 25-30%, but I'm the fintech guy, if you will. We have teams in London, Vienna. We have offices in Paris, Berlin, San Francisco. And our focus clearly is Europe. We have over 50 fintech investments now, but we've started to venture a bit outside of Europe. So we have one very interesting startup in India, business banking concept called Open Bank, doing very well, and then a few others. So it's been a great journey.
One thing that I think is really interesting is you guys started, with small funds and quickly, expanded. Also, your reach, and you've been able, over the past years to make a lot of investments in very diverse markets, very different geographies. How do you do that? What's the typical difficulty of doing this? And my other question is more, is it because actually fintech, maybe compared to e-commerce or other segments, is it because fintech is actually much more global in its essence than other segments? Just trying to get an understanding on how you can operate these investments in very different markets.
That's a really interesting question. I can say that within SpeedInvest, certainly we've always been the most adventurous in pushing the geo boundaries.
Yeah.
But I'm not sure that has anything to do with the global nature of fintech, to be honest. On the one hand, of course, the fact that everybody in the world except maybe China is using iOS and Android, it creates a global standard platform to operate with. And that's true, of course, also for financial services. On the other hand, as you very well know, a lot of our investments are regulated, right? And maybe they're not directly regulated, but you have to have a regulated partner. And that creates a lot of friction. Either you have that license, and having a license in whatever, Germany, India, or Brazil, it doesn't matter, is huge, adds huge complexity to all the challenges you anyway have in starting a tech business, right? So, capital requirements, you're audited heavily. I mean, this is an additional big challenge. Or you have a licensed partner, and I don't have to tell you, licensed partner typically means old school tech.
Yes.
So you suddenly have a partner, they have a license, but they have an old tech platform. And so huge friction again. So I would say that regulation makes it, again, more local and regional, or it creates a huge barrier as you want to expand in other geographies. And this is even true within Europe, right? So going from Germany to France, you would say, hey, single European Union, right? Financial union. No way. You have thousands of little operational barriers to overcome.
That's a good point.
Sure.
Ganesh, you say your focus is emerging markets. That's very broad, right? Because the definition can include the whole globe. And by the way, it's maybe 2/3, if not 3/4 of the population now.
Yes, I think smiling because we are very acutely aware of that, and we keep debating this all the time. So we have we have portfolio across Asia, Africa, Latin America, and GCC. In terms of countries from Indonesia, Thailand, India, Brazil, Philippines, South Africa, Nigeria, Ghana, Mexico, Turkey now. So it's actually it's a little too much if you look at it as a sort of outside in. Frankly, I think there are a couple of things which have really helped us. One is there is strong alignment within the team as to what we stand for, and as I said, when we look at inclusive fintech, we have a lens of saying these are fintech solutions for the masses, underserved or unserved in these markets. And a lot of these markets have 60, 70, 80% of the population, whether on the consumer side or SME side, that are unserved or underserved, right? And just not efficient solutions, or do not have access, do not have quality solutions, highly priced solutions, so on and so forth. So the lens we apply from a consumer or SME understanding perspective has some uniformity. But as you rightly said, or both of you rightly said, it's a fascinating sector that has global, local dynamics, right? There are a set of dynamics that are global, there are a set of dynamics that are local. When you talk about cultural nuances, when you talk about regulation, when you talk about how fraud happens, when you talk about how SMEs might behave differently. Some markets are getting formalized into, like if you take retail, are getting formalized into supermarket formats, but some markets, even as they are rapidly evolving, still remains small format. So there are a lot of these nuances which are local, but at a fundamental level, when we look at digitization of payments, digitization of lending, some of the digital insurance dynamics, some of the handshake between how working capital credit or how credit lines help merchants become more efficient, and how you can tie that to supply chain. So some of these themes we see a lot more commonality. Like one example I give a lot, a lot of times is that we looked at about 15 alternate POS companies or MPOS companies across 8 markets before we invested in the first one in South Africa. I mean, from India to Brazil to Mexico to Philippines to Indonesia, we looked across markets. And one of the fascinating reasons was, there are two reasons. One is we said alternate POS companies need to do more than just be payment enabler, because that is foundational business, but that's not what builds scalable venture-backed companies. And part of this, of course, was learning from Square. But the second part of it also was, if you look at South African market, as both of you know, the acceptance is there's a huge acceptance gap, right? There's 70-75% cards, and there used to be only 20-25% acceptance when we backed this company. So the infrastructure or the ecosystem also lent itself more easily to it. But having that a broader perspective across markets was made it a lot easier for us to also make sure we don't drink our own Kool-Aid in terms of being focused on one or only couple of markets and saying, oh, we got to deploy the fund across these markets, right? So in that sense, it helped us step back and kind of assess these markets more dispassionately. So it's a balance. I think for us it's been global local balance, but frankly, also with every passing year we've been learning exponentially, because in the beginning it's hard, it's complicated. How do you manage that global dynamic? But with every passing year we've hopefully been getting better at it. But ask me in 5 years and I'll tell you if that's true or not.
Before we talk a bit more about funding and fintech, first is, I mean, let's see a bit, how we change in this lockdown, right? I mean, we've gone through a few months that were, of course, completely, unpredictable. At least, unpredictable when it hit us. Then everybody, went to see Bill Gates, TED Talk a few years ago, and then you suddenly realize we should have seen this coming, but we didn't. So a few things on that one. The first one is, how did it impact you, right? I mean, Vienna, completely different set of circumstances. The lockdown was very different compared to what you have in India. How did you do, through this lockdown? What has it changed for you? What has it changed in the way you operate?
I think, this whole wave started, I would say, in India, Southeast Asia, or Asia broadly, outside of China and China, Korea, and Japan. It started probably more in early Feb, and in India more towards end of Feb, early March. It was very slow to pick up in number of countries. I think you're starting to see the impact of, at least the medical impact of this more in the last few weeks. But from a business perspective and economic perspective, I think March and April were sort of almost full shutdown months. You saw people were in a state of shock. Things came to standstill. It took all of March for different companies to start realizing, okay, this is a lot more serious than we think it is. April, some companies took a hatchet approach. Some companies took, I would say, a little bit more methodical approach in saying, okay, things are going to get tougher. Let's plan for, what to do. If this lasts 6 to 12 months, if it lasts 12 to 18 months, if it lasts 2 years, and beyond that, frankly, I don't think a lot of us wanted to apply our minds. At least I didn't want to, because we're going to be in a much tougher place if this lasts for more than 2 months, 2 years. But we kind of slotted it into 3 different scenarios and started, figuring out what to do. Number of companies have taken some very serious steps. Come May, I'd say things have started looking somewhat better. Of course, in India specifically, there was this dynamic of full lockdown as well till about a couple of weeks ago. which also made things more black or white.
Mm-hmm.
Some things are ambling back to, I guess, some activity now, but some pockets of the country, maybe 20% of the pockets, still remain seriously impacted. Countries like Thailand also have taken some more serious steps. Countries like Indonesia haven't. So it's still very fluid to kind of put a pin on where this is, where we are headed with this. Having said that, I think from an activity perspective, I would say last 4 or 5 weeks, we have seen better activity in general. In the markets and in the economy, we see that in payment flow, we see that in some of the other businesses. But I mean, frankly, nobody knows if we have put this behind us. We are probably sort of sitting, in the middle of a rapidly evolving situation. So I would say last 4 or 5 weeks have been better, but people are taking very baby steps. 2001-2 and 2009-10 were really tough years, especially for digital startups, entrepreneurial funding,
Yeah.
etc. You can go back and look at stats; they were really bad, and for fundraising as well, for companies
Mm-hmm.
and for funds. So, in some ways, we have to brace ourselves for what is likely to happen next year.
If you look at our portfolio, of course, we had the whole spectrum from folks that were really profiting from this situation, like trading.
Mm-hmm.
We have an investment, Bitpanda, curiously out of Vienna. We normally invest very little in Austria. It's a small market, but these guys come from the crypto trading and moved into fractionalized investing across all asset classes. I mean, those guys are going through the roof, right? I mean, business volumes are really going through the roof. And funny enough, one of those guys, Eric, is a gamer. He's a classic gamer type. He just loves this, right? He has his headsets on, and he is like, he is in his world now. On the other end of the spectrum, right, we've invested in neobanks, right? And if
Yes.
you have a high cash burn and you're going for market share and user acquisition and you have 3 months runway, I mean, COVID is the toughest thing that can ever
Yeah.
happen to you. Thank God we found good solution, but like Guillermo from Binex, sitting in Madrid, of all places, in a little apartment, having to reduce his burn to 1/4 within 4 weeks. And thank God all of us, DN Capital, Red Alpine, all the whole cap table really rallied around it because we believe in the team, we believe in the concept. They went to Mexico, which is growing very nicely. And so we were able to put up another 11 million to make sure he can go until end of next year. So
Yeah.
huge respect because, these guys have never seen a crisis. These are young chaps, right? So that's kind of how we personally went through this. Overall, what we've been doing is basically saying, okay, let's create a situation where you all can survive until end of next year without funding, right? That was sort of our approach, and we've done all that. But of course, now it's interesting. I mean, and we'll talk about this in a second, right? How is business going to be in the 6 to 12 months? Because a lot of these businesses are seeing their volumes pick up again in May, right?
Yeah.
And,
Exactly.
And so and these are great entrepreneurs. So they're like, okay, let's get back into the game. Let's invest into growth. Let's get it. Yeah? And so that's very tricky because what are you going to say? What if in September, October, there's a second wave?
Yeah, exactly.
And you've already spent everything on growth over summer. So these are very, very difficult questions because the scenarios are unclear, right?
Mm-hmm. No, I think that's exactly the point. I mean, if I look at our business as well, I mean, payments, it's easy, right? It's a derivative business of the activity of what people do. So of course, if you do payments offline, small merchants, very tough time. If you do online payments, large merchants, you're having a moment, right? I mean, we see volumes going through the roof, 80, 90% year on year, for most of our merchants, which means we're adding the volume going through our platform, which you would find usually around Christmas period or around Diwali, right? So it's crazy. But the reality is, if you look other businesses that rely, on taking risks like credit. Right now, we are blind. That's the reality because the credit business, if you are going through a moratorium, which has a lot of benefits for the consumer, but one of the side effects is there is no way for us to read into the risk we are taking. What's the consequence? You shut it down. And that's the thing, that it's easy to shut it down, but to get it restarted, then you need to have the confidence that you understand your risk you're going to underwrite, that nobody wants to be the first one to go back into the market. When you do lending, you want the co-lenders to go at the same time. So it's going to take some time. The second thing is businesses relying on high cost of acquisition. I mean, I think we've all seen, a lot of business plan, where it was always going up on the right side, right? Always up, and don't worry, growth will sort this out. I know that I'm losing money right now, but at one point, my fixed costs will be absorbed, by my revenues, and everything will be fine, etc., etc. Well, I think this brutal, slowdown because of the lockdown, and also because of the fear in the consumers about the recession to come, because the recession is just starting to hit us. I think this has shown some of the weaknesses of some of the business plans, right? So I think when I see this, do you see, guys, coming to the fintech market, some kind of consolidation around, a few big players that can really consolidate, first, raise more money. Second, they have a consumer base, etc. So at least they can live with that. But also because smaller startups, weaker startups will have no choice but to sell out. Do you see this? The second thing is, do you think actually this could be an opportunity for the big incumbents that have always been slow, etc., etc., but they still have some balance sheet and cash, right? So what's kind of your predictions for the structure of the market itself?
I can take that. So first question, consolidation. Yes, definitely. I think this will happen. We are already in the portfolio, very actively looking at consolidation opportunities. I think there's a much higher willingness. I'm talking Europe primarily right now.
Yes.
There's a much higher willingness by LPs, which in Europe, by the way, are not only VCs, right? There's quite a lot of corporate money around here.
Absolutely.
So a lot of banks, insurance companies, arm's length or also directly, are very involved in fintech. So there is huge willingness in the investor community to talk to each other about scenarios. Now, of course, in the past, I would say even 2-3 months ago, a lot of the founders would not have been willing to engage in these discussions because, of course, it creates very difficult questions around, who's going to lead this, right? Mm-hmm. And so, but that is also changing. So I think you will see consolidation in Europe, probably more under the headline of geo expansion. So if your home market, you're number one in UK, right?
Yeah.
It's a brilliant opportunity to merge with someone and then be number one in UK, Germany, and Italy, maybe. Mm-hmm. So in terms of geo expansion, it makes a ton of sense. You said the other question was opportunity for incumbents. That's an interesting one. Of course, in theory, this is a great time, in theory, for a bank or insurance company or a big tech company or like a big media house like Naspers, right? So everyone that has cash to pick up fintechs and insurtechs right now, but the banks, insurance companies have very, very different things to take care of right now. I mean, this crisis is going to end up in bank balance sheets big time. We all know that, right?
Yes,
So
exactly.
so right now that's going to be the full focus, and I'm a bit pessimistic. I think we
Hmm.
need more M&A. We need more M&A. We need more
Yeah.
trade sales, a lot more, because it's been disappointing the last few years. But I'm afraid the potential buyers will be sidelined by their own internal issues. That's what I'm
Hmm.
afraid of.
Hmm.
But let's see.
Oh yeah. Well, I think Ganesh, we've seen this in India, right? With Facebook investing in Geo, WhatsApp announcing, that they're launching WhatsApp payments in Brazil. I mean, you can imagine in your fintech in Brazil right now, you start thinking like, oh my God, I've got hundreds of millions of users, who are gonna be using WhatsApp to make payments. So this is happening already. Ganesh, what do you think?
So on one side, I would say that a big variable is obviously the dynamics of each of these sectors, and the behavior would change accordingly. On the other side, I guess when you talk about incumbents, I guess in emerging markets at least, the incumbents are either the large banks or some of the large conglomerates. There are very limited set of tech companies which can be technically called incumbents. I mean, sure, Flipkart and Paytm and Gojek and Grab can be called incumbents, and they are at least some of them are very actively acquiring. Have been acquiring in general last couple of years. There is no particularly heightened activity in the middle of COVID, because even though they are incumbents, they all, the relative stability of the incumbents in emerging markets is not as mature as in developed
Yeah.
markets. So when a shock like this comes, they need to take care of their own. First order of business is to take care of themselves. First, they have to figure out that their core businesses will survive. Like Gojek's core business is hit 80% maybe, right? Not anymore. I mean, it's come back in the last few weeks. Grab's core business is just like Uber's. Sure, they've expanded into other areas, but they're all also trying to protect their core business. So that fragility is there. So, and when you talk about banks or conglomerates who are the traditional incumbents, like Stefan said, I mean, they are not in a position, maybe in some cases because of business reasons, or in some cases just psychologically they cannot move the way some of the
Yeah.
global digital players would. So what that leaves is two sets of players. One is your global broader digital players, whether from China or the US, and it leaves some of the fintech established players, right? Whether it's Visa, Master, Naspers, PayPal. We are seeing some more activity from these two categories of players, but whether they will pick up companies
Mm.
by paying $100 million without doing enough diligence, or because the deals are moving fast, or will they pick up smaller companies because of acqui-hire or talent or product? In theory, consolidation should happen, but my sense is the consolidation is going to happen a lot more next year. So I really think 2 quarters down the line, we are going to see a lot more consolidation, a fair bit of which will not be pretty.
But I agree with you. I think this consolidation will happen a bit down the road right now, and I think a lot of companies start thinking right now. Okay, I've made it through, and it's a bit too early to say. But very specific questions, guys. Do you see the valuations coming down right now?
Of course, in our portfolio, valuations always go up, right? Yeah. So,
Interests are aligned. Interests are aligned. Yes.
but no, I mean, look, it's interesting. We see a couple of things. On the one hand, I would love to see the statistics. I haven't seen them yet. It's too early, right? So it would be very, very
Yeah.
interesting. But my feeling, and this is anecdotal evidence, is, I mean, you do see very high value up rounds at the moment, but they seem a bit less than normal.
Hmm.
But it's not as if the market, the fundraising has stopped. So you see a few, whenever in a fintech vertical, in a fintech category, a company is perceived as a winner, like all the VCs pile in, and so you see really nice up rounds still in April and May. Probably fewer, but still you see them. Again, I'm talking Europe primarily. But for everyone else, it's not a good idea to raise right now. I mean, except again, like Ganesh said, there's certain, insurance in general is staying up very nicely, and trading, wealth management. There's a few categories that are still raising very well, but everyone else, if you're not already well advanced and being perceived in the market as a winner, it's probably not a great idea to do an external round and have an external VC set a valuation at the moment. Probably not a great idea.
And I think 1 quarter down the line or 2 quarters down the line, companies are going to feel the pressure a lot more. And then I guess the priorities will shift, where that getting money in is the most important thing. I think it's going to happen for a number of companies down the line. But today, I think we haven't felt the full impact of it. The other dynamic, and this is the classic challenge of venture, or two things I would say. One is, there are 5 to 10% companies that are always in demand, and everyone loves them, like Stefan said. So I'm not seeing much of a difference there, especially in number of these hot emerging markets, whether it's Brazil, whether it's Indonesia, whether it's India, so on and so forth. And the reason that's happening is compared to 2000, and I think this will also come under pressure next year, but less so than 2008, because we have way too much money now compared to we had back then in the markets. So there are way too many players in the markets. There is way too much undeployed capital, which I think will keep the price of the asset high. And that is the worrying part, because at some point reality has to catch up with the expectation and price of the asset. And a crisis like this will make it much, much, much harder for reality to catch up.
Yeah, I agree with that. Yes, I think it's going to be interesting indeed, yes, to see this over the next 6-9 months as we see, the companies now coming down, of this urgency phase, right? Cutting down the cost, reducing the burn, etc. But then going back to, hey, I need more money to continue, to fuel my growth, or going more into the consolidation phase. I think that's going to be interesting for the market, for the founders, and of course for the investors. For the last part of our conversation, I'd like to zoom out a bit outside of fintech. I think a few things, right? This coronavirus, right? I mean, we didn't see it coming because maybe we didn't look for it, right? I mean, a lot of people actually were predicting, like, guys, pandemics, this is one of the key risks, and it's gonna happen. And then now, with hindsight, when you see this, you think like, oh my God, of course, it was supposed to come. It's like a market crash. It's gonna come. You don't know when. And the thing that is more surprising is, but did we prepare for that? And I think every business, especially in fintech as a BCP, because the regulator asks you, what's your continuity plan, etc. But there is no continuity plan with something that is so disrupting to your business model. And pandemics is one, but there are other things over the next decade, right? We have even bigger threats, right? And more long-term adjustments to make, right? So sustainability, for economies, climate change, for instance, these are big threats. And you start seeing, a lot of founders, not just founders, right? I think it's a generational problem as well, but at least founders saying, hey, look, I want to tackle, these big problems. I want to have an impact, with my company, with my ventures. So a couple of questions on how you think yourself about this. Founders want to have an impact, right? That's fundamentally why they start a business, right? How do you think you, as an investor, can have an impact?
Laurent, as you probably know, of course, we have, inclusive in fintech is sort of embedded in what we do. And in our prior lives, all of us who founded Quona used to be investors in financial inclusion in a very physical and traditional sense, mostly microfinance, SME financing companies. So the ethos of the firm comes from there, and frankly, that is part of the alignment, a big part of the alignment that keeps us going, because we are remote, we are in 8 countries across 4 different sort of continents. But that's kind of what keeps us going. The focus still on sort of inclusion and impact, but in a market-oriented way. I mean, they have to be business successes. This is impact in an experimental and personally satisfying way is not good enough unless it scales. and becomes commercial and business successes. And to reflect that, we have also a lot of investors and peers, like we have several sovereign development funds who are investors in us, who also keep us honest on that front. And they're exhaustive sort of whether on more practical side, how we look at opportunities, and this is a gating factor for us before we start engaging with entrepreneurs. But also on more technical side, we have a lot of ESG and especially impact-oriented norms and the social and governance controls in place before we can go into companies.
Stefan, what does it mean for you really when you look at the investment, not just the ones you have today, but post this crisis? Is it altering the investment philosophy also for you?
I think sitting here in Europe, it is extraordinarily important. We all know Europe is very behind in terms of producing the global tech platforms that people use all over the world. We're dramatically behind. It's really driven by US and it's driven by Chinese and US players, and to some extent also India. I'm definitely expecting India to have an impact as well. So for me, it's a lot about making sure that Europe remains a place where young people that are ambitious can build really meaningful tech companies with good jobs here in Europe and don't all leave to the US and to China or to other places. I think that's very important. And so, I'm actually quite proud that, I've been involved from day one in companies that have produced close to 3,000 jobs in Europe. And so we need a lot more of that, because these are great jobs. And I mean, what I get a real kick out of is when people like Barbaros or Christian and others, they have basically built a business with 200, 300, 400 people, and they are running it the way they want with, a good atmosphere, and they're providing an environment that is forward-looking and is independent and financially independent. And I think we need a lot more on that. I don't want to live in countries here where all the job creation is government, if you know what I mean. So I think that's very much driving me personally. But also to see founders grow as a person, I totally get a kick out. Like you stay with those guys on a journey, and this is not just fintech. This is like they go through a personal journey from 25 to 35, and they change so much, and they become very important for their societies. Like Barbaros is very important in Turkey. He's a role model.
Absolutely.
And hopefully, he will inspire 100 more people to do what he's done. So that is impact for me. And then, of course, I think there's a sort of on the private side, I think there's a lot to learn from these fintech founders that you can apply to other parts of society. So I'm personally involved in a few social businesses where there's people who are not just doing charity, right? But they want to build a driven business that has social impact in the world. But they're doing it very much with the mindset that we know from our tech founders, which is not wait for anyone to give you money, but actually really go out and start doing things and hustle and, raising private funds and maybe even create a sustainable business model on your social business. That's also very important. I think we need a lot more of those. And so there's a lot of what we do as VCs, I think, can be applied to some extent also to nonprofit and social sector. It's an experiment, but I think it's something we absolutely have to do because we just cannot rely on governments to do all that going forward, right?
Yeah, absolutely. That's very interesting. Yes, I'm very bullish actually on Europe as well. I think big tech platforms, etc. I mean, it seems that we've kind of lost the train there for sure. The reality is on other big topics as well. I think we can lead the agenda, especially when it comes to climate change, sustainability. I think we can lead the agenda on that, and there are new platforms to be created for sure. Okay, just to bring it to a closure, this lockdown for many people means being closed in a room, a library, or or other, small studies. I hope you had time also to reflect, right? Not just fight the urgency. And so going through the books you might have come across, over these past months, would you have anything, to share with the people, something that you thought was really, meaningful or entertaining, whatever, something you would like to share?
Yeah, it's funny. I actually, in this lockdown, first of all, I didn't have enough really quiet time to reflect. I need more of that. I hope in August, for sure, there will be time for that. But
Near the lake.
yeah, it's funny. It's funny. My immediate reaction was to read again old books that I love. I don't know, rather than new stuff, and actually really literature
Yeah.
and not necessarily books that talk about, okay, how's the world going to change, etc. I mean, that kind of stuff you read anyway all the time. So I went back and I reread a book called Solaris, a
Oh,
science fiction classic from the 60s. And I really loved it. What I didn't like about it, it's quite disturbing. And I was feeling, okay, we're anyway in such a disturbing situation. So I quickly read it. And then I started to read again War and Peace by Tolstoy. I mean, and that just puts me into a completely different world, which I seem to need as a balance to all the craziness going on here. Yeah. So War and Peace is a good one. But take a month, take a good month to go
take a
through
moment.
it.
Exactly. Yeah, that's
Take a good month and you need vacation.
Yes.
absolutely right.
So,
Ganesh, anything to share?
the one such book I've been reading for a while now is called Laws of Human Nature by a guy called Robert Greene. It's
Yes.
actually,
Okay.
I have prejudice against sort of such topics which seem very global and very abstract. But I've really been impressed by the book in terms of how each chapter starts with a very specific example, whether it's modern business times to Greek philosophers to medieval times to how some of the ancient civilizations went through what they did, so on and so forth, and then bring it to a certain human behavior. So it's actually been pretty good, quite enlightening, frankly. And on the business side, or just on the on more broader startup side, as Stefan said, there's a book I keep referring to quite often. It's called The Hard Things About Hard Things, which I keep referring to parts of that book quite often, not because, a lot of the things Ben talks about are things you can relate to, especially through entrepreneurial experience. But I refer to it more because sometimes it helps you figure out how to frame difficult discussions or difficult negotiations you might need to have with various players in the ecosystem. But yeah, that's probably
Yeah.
been what I've been doing the last couple of months.
Yeah, that's true. This one is a very good one, very practical. I think it can resonate with a lot of people. So I'll share
Yeah.
mine right now is why are we
Ah.
waiting, right? If people can see. Nicolas
Hmm.
Stern, and look, I've been spending the past year really going deeper and deeper, around circular economy, sustainability, and climate change, which are really the big threats of the next decade. This one maybe a bit more dense than others, but very serious guy, Nicolas Stern, right? Professor at LSE, one of the first writer of a big report bearing his name, and this book makes it a bit more accessible and accessible to everyone. And just the title is like, why are we waiting? It's like, what else do we need to start making the changes that we need to do? And there is always hope. We know what to do. It's gonna be bloody difficult, and we are gonna need everyone to do it. That's what basically you can see from that. But there is definitely hope, right? But we need to get going. So that one is a good one. Hey, gentlemen, thank you for your time really, and thanks for this conversation, being very open. I know this has been very intense and challenging times for everyone. I really appreciate, having your insight on how you're navigating, through these times and what you see coming around the corner. I think that's going to be extremely valuable to a lot of people. I wish you all the very best. And I hope, we are going to have, again, in person, we might cut the travel. We can do a lot of things on Zoom, but having a drink together, that has always been a pleasure. So I hope we can do that soon again. So, but thank you for your time.
Thank you.
Looking forward to that drink. Looking forward to that drink, guys. All right. Thanks, Laurent. Thanks, Ganesh.
Bye.